What if this week's Bitcoin pump is not just another bounce, but the beginning of the biggest rally of this entire cycle? Well, Bitcoin just surged, and when we look at historical patterns, something very interesting starts to appear at this point. In this video, I will show you exactly what's happening and when the market could really start accelerating. Now, if we look at this poll, bigger percentage of you still think that we are not in a bull run. And I agree with you. We are actually not in a bull run yet, even though we saw this interesting bounce and very strong bounce over the past week. Let's talk about Bitcoin first, because the market is starting to move out of this tight consolidation we've been watching. After the sharp sell-off we saw in October, Bitcoin entered this compression phase. It's moving inside a tightening structure, making higher lows while facing resistance, very strong resistance above those levels. This kind of structure usually means that the market is building energy before the next big move happens. The longer the consolidation, the bigger the next move is going to be. And this week, we finally see that we are trying to break out of this structure, break to the upside. Bitcoin pushed to the upper resistance, to the upper line that you see over here of this consolidation range, which was another signal that buyers were trying to regain control. At the same time, price also, if you look on the daily chart, at the same time the price also touched the 50 EMA, which is an important short-term momentum indicator on the daily chart. Obviously, we couldn't break the strong resistance. As Bitcoin pushed higher, it ran directly into the major resistance zone between 74k and 79k, and a lot of sellers actually, because of this consolidation range that you see over here, a lot of traders are having sell orders at 73k. And this area here acted as a strong support before the sell-off, and now this is acting as major resistance. So when price tested that zone this week, we saw a rejection, very long rejection candle, as you can see over here, that happened yesterday, and it's showing that sellers are still defending this level strongly. So right now, the market is stuck between two major levels. Below us, we have this lower band of the consolidation channel, where buyers are stepping in and pushing the price higher. Above us, we have major resistance zone, 74k, which is preventing Bitcoin from breaking out. So this creates a decision point for the market. If Bitcoin can actually break and hold above that resistance zone, or break above 74k and hold there, that could open the door for a stronger move higher, moving forward, and we go to the 80k levels. But as we saw, price got rejected again, and we lost the momentum. So that created another wave of downwards pressure, and this could actually push us towards the lower part of the channel in the upcoming week. And this is now the third time we are trying to break above this channel and end this compression phase. So we see volatility starting to return. So the next big move for Bitcoin could be getting closer and closer. So the question now I've got for you is, in the upcoming week, will buyers break this resistance, or will sellers push the market lower again? Let me know what you think in the comments below. Now I want to share another chart. When you zoom out on Bitcoin and study the monthly chart across multiple cycles, one pattern becomes very clear. The time between the top and the final bottom of the cycle is usually around 1 year. This is something a lot of people ignore because they focus only on price in the short term, but also the time structure in markets is just as important as the price structure. Let's look at this historical context. In 2017 cycle, Bitcoin topped in December 2017 around $20,000. The final bottom of that bear market came almost exactly 1 year later, in December 2018, around $3,000. So we had roughly 12 months from peak euphoria to maximum capitulation. Now, let's look at the 2021 cycle. Bitcoin topped in November 2021 around $69,000. The final bottom came in November 2022 around $15,000. So again, almost exactly 1 year from the top to the bottom. And here I want to tell you that markets tend to move in psychological cycles. Euphoria at the top, denial during the first drop, hope during the relief rally. And if you apply this to the recent pump we had, and which marked the top of the cycle, we had euphoria at the top. The first drop, we denied that. We said, no, it is going higher. Then we had a small relief rally that you see over here, and this is where a lot of us were hopeful that we're gonna go again higher and reach new all-time high. Then the second leg down over here, this is where fear started to appear. And we are now in this fearful zone. We've been, even if you look at the fear and greed index, fear has been around for the past couple of months. And capitulation is at the final bottom. And historically, that entire emotional cycle takes about a year to fully play out. Now we have institutions, so maybe this could be a little bit shorter, it could be a little bit longer on the other side because we had the war is happening and we'll see the consequences of this war a little bit later. It will definitely have an impact on the economy. So maybe this time could be longer, could be shorter, we can only be guessing. But there is one strategy which will always be in your favor, and I'll talk about that shortly. Now, if we apply the same logic to that current cycle, the recent peak occurred around $126,000 in that area. If the same historical rhythm holds, it suggests that the final bottom could appear roughly a year after that peak, which brings us to October this year. That's where the chart becomes interesting. Right now, we are sitting in a zone where price has already dropped significantly from the highs, around 50%. But there is a still major support region below us. That support area comes from previous cycle resistance is becoming new cycle support. In the previous cycle, Bitcoin struggled for a long time around the 50-60k region. That area acted as resistance multiple times. Now in this cycle, this exact region from 60k to 50k is acting as a major structural support for us. And markets love to do this. Old ceilings often become new floors, which means there is a very real possibility that Bitcoin makes one more sharp move down, a final crash that shakes out the last weak hands and brings price directly into that historical support zone. That would perfectly align with the 1 year cycle bottom pattern that we've seen before. And to be honest, if this happens when we drop to this zone, this would be a final capitulation, and that would be probably one of the healthiest resets or outcomes of the market because it resets sentiment and creates the foundation for the next expansion phase. Now, this is one side of the story. Now, I want to tell you another theory which could also be true, and it is worth considering. Look closely at the massive red candle around October the 10th. The size of the drop was extremely sudden and aggressive. Sometimes in markets, especially crypto where exchanges control large amounts of liquidity, major players can create a very calculated move to establish a clear structural low. In other words, this drop may have not been some random panic. And by the way, I don't think it was. It probably has been deliberately engineered volatility. Why? Because if you create a huge wick like this, you effectively mark a very clear bottom candle on the chart. And then the entire range of that candle can become the consolidation zone of the cycle. Think of it like this. The wick becomes extreme low. The body becomes this trading range. The top of the candle becomes your resistance. So if that's what's happening here, then instead of another deep crash, the market could simply consolidate inside the full range of that candle. This would still have a very similar psychological impact on people and investors. That would accomplish the same goal psychologically, exhausting traders, shaking out leverage, and allowing long-term accumulation from bigger players, while retail investors are still waiting for another deeper crash and are still hesitant and thinking that we are going lower. So both strategies would have exactly the same psychological impact. So two scenarios. One is we follow the historical pattern and get one final crash into the major support zone, completing the classic 1 year cycle bottom, and that is influenced by the war right now and the impact on the economy that we would see in the upcoming weeks, the upcoming months, crash the economy completely, and then US would start printing money, which will mark the start of the expansion phase, and that would probably play out in a year time. Scenario 2 is the October 10th candle, which already marked the low, and the entire market simply moves sideways inside this range, using the entire candle as consolidation structure. Either way, the bigger message here is the same. It doesn't change. This period, the next 6 to 12 months, is not time to panic and to run away. It's the time to position yourself for the next cycle, because historically, the people who win in crypto are not the ones chasing pumps during hype phases. The people who win are the ones who build positions quietly during the boring consolidation periods, during the fearful times. That's all I'm trying to say. So if you're looking at this chart and wondering what to do, the answer is simple. Use this year extremely wisely. Consolidate your high conviction, long-term picks. Accumulate projects you truly believe will survive the next cycle. Because when the next expansion phase begins, whether it starts from this range or from that lower support zone, the biggest opportunities will already be positioned. And by the time the market realizes the bottom is in, it's usually already too late to buy cheap. So act right now while everyone is wondering, have we bottomed? Are we still consolidating? Are we going to go lower? Take advantage of this time. If you want to see what I buy, what I sell, when, feel free to join Discord. It's all available there. That's for me today. Thanks so much for watching. I'll see you in the next video.